Have you ever looked at the stock market hitting all-time highs and thought to yourself, is this for real? Is it living in a completely different world? Well, today we're breaking down an analysis that says yes, it is, and that a massive global domino effect is already tipping over.
So the big question here is the market just completely ignoring a crisis that's already taking a sledgehammer to our global supply chains? This analysis brings up what it calls a really dangerous pricing mismatch, basically a giant gap between Wall Street's optimism and what's actually happening on the ground.
And this captures that disconnect perfectly, doesn't it? On one side, you have the market's view. Everything's great, charts are soaring, it's all calm. But then you look at the physical reality. A major global choke point, the Strait of Hormuz, is described as basically being blocked, choking off the world's supply chains. It really seems like the market is trading on vibes, not on the hard reality of logistics.
All right, so where does the first domino fall? According to this analysis, it all starts pretty quietly, but with a ton of force, in the energy and petrochemical supply chain. This is the invisible foundation that apparently is already starting to crack.
It all kicks off with a material you've probably never even heard of, but I promise you, it's in almost everything you touch. It's called naphtha. Just think of it as the key ingredient for plastics, for packaging, for textiles. It's literally the building block of our modern world. And a huge portion of Asia's supply comes directly from the Middle East.
And the impact? It was immediate. With that critical shipping route disrupted, the source reports that naphtha prices in Asia have already shot up by more than 50%. Now, this isn't a prediction for the future. This is a shockwave that's already hit.
And a price spike like that, it just triggers an instant chain reaction. You've got industrial powerhouses like South Korea and Japan reportedly having to slam the brakes on production. This means higher costs for, well, everything. From the device you're watching this on, to the packaging your food comes in, to the shirt on your back.
So as this energy crisis ripples out, it knocks over the second and honestly maybe the most urgent domino, a direct threat to the global food supply. This is where the clock really starts to tick.
This quote from the analysis just nails it, right? Unlike the stock market, you can't just hit pause on agriculture. Biology, the seasons, they don't really wait around for people to figure out their geopolitical problems.
And here's why that's so crucial. We are smack in the middle of the spring planting season for the entire northern hemisphere. This is a tiny, non-negotiable window of time. If farmers can't get the fertilizer and natural gas they need right now, that's it. The opportunity is gone. The damage to this year's harvest is locked in. It becomes irreversible.
So why is this one disruption so critical? Well, the data shows that the Middle East is an absolute giant when it comes to fertilizer production. We're talking about a third of the world's fertilizer components and over half of its sulfur. When you cut off that supply line, the entire global food equation gets thrown into absolute chaos.
Okay, now for a connection that's way less obvious, but just as critical. The third domino threatens the high-flying tech and AI industries. This is an invisible threat the market might not even realize is there.
The key here is helium. And no, not the stuff you put in party balloons. This is an absolutely essential, totally irreplaceable gas that's used to cool down the process of making the most advanced semiconductors. You know, the actual brains behind AI and all of our modern tech. The analysis claims a full third of the world's supply comes from the Middle East.
And just like we saw with naphtha, the impact was fast and severe. The blockade reportedly caused the price of helium to double. Overnight. For the tech giants who rely on this stuff, that's not just a line item on a budget. It's a fundamental threat to their ability to even produce their products.
So when you mix the crazy cost of helium with spiking electricity prices from LNG shortages, you get this immense pressure on the entire AI supply chain. It's like the brain of the modern economy is being squeezed from both sides. And the analysis argues these costs, which are just growing and growing, are simply not being priced into the soaring stock prices of the world's biggest tech companies.
So all of this leads to the final domino. After the physical supply chains for energy, food, and tech start to snap, the financial fallout, well, it becomes unavoidable. This is the market's ultimate reality check.
So how does a physical crisis turn into a financial one? The source lays out a pretty clear path. It starts with smaller nations, the ones that depend on imports for their energy and food. Their bills just balloon. That leads to currency and debt crises, and they basically become the canaries in the coal mine. And as these smaller economies start to fail, the problem doesn't just stay there. The argument is that this financial pain creates a contagion effect. It flows right back into the bigger, interconnected global economic systems that we're all a part of.
And this really gets us to the core argument of the entire analysis. No matter how optimistic they seem, capital markets can't defy the laws of economic gravity forever. Eventually, they have to come crashing back down to the physical reality of supply chains and harvests and things on actual ships.
So we're left with this one last, pretty provocative thought. This analysis suggests a massive repricing of everything is inevitable as soon as the inventory runs out and production costs soar. It really makes you wonder, right? What happens when the price of everything finally catches up to reality?